Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn and Associates with your weekend version of your metal update, and this is for Friday, the 26th of January, 2018. Well, inflation, inflation, inflation. That'll be the theme that you start reading about in newspapers. And the rationale will be, yeah, I know that the gold and the silver are down right now, but they've also done their best performance in a long time, and they're consolidating from the looks of it on the chart. Energy prices in a run to the upside. The wheat market's starting to move gradually higher, as is the corn market. And you've been under the influence in soybeans of higher prices. We have interest rates still strong as can be. And of course, the one marvel of everything has been the stock market, where it doesn't matter what goes on, it just moves higher. And that's where you're at. President Trump did not do anything to upset the world markets today as he spoke on the World Forum at Davos, Switzerland. He said America first, but he covered it beautifully when he said every leader of every country wants their country first. Not bad. He said we're open for business. Good move. And now I'm already reading how FedEx is going to spend over the next 7 years about $3.5 billion because of tax cuts. You know, you're getting a lot of front running in these markets. But as I said, let's go to the metal market. And let's go to the market last month, because we're coming to the end of this month. If you picked up, the previous resistance had been in green, the 100-month moving average of closes in the upper Bollinger Band. Momentum gradually pointing up. You can see the red lines over the blue. The black lines on each of the charts are Bollinger Bands. A Bollinger Band is an algorithm designed to keep the market within it 95% of the time. Now, please understand what I'm going to say here. All of this sideways action will eventually turn into either a base or a top for this market. It will not stay sideways. You will eventually look at the market. It'll either be going up like that or coming down like this. But the fact that we're so long sideways has me more than ever convinced that this is what we're dealing with. When I take a look at a weekly area chart of closes, you've gone up now on the weekly, and this is only a closing basis, vertical, $107 in the market. Pretty big move. When we look at a weekly bar chart, even though you're down today, for the week you were up $19. You've got to understand perspective when you look at this. Also, look at this price. Took out the previous resistance that we had talked about in another one of our reports. When we look at the vertical price rise on the swing line, you get to see how big it is. And obviously, what traders like is give me a consolidation phase or a pullback. If you didn't come into it and picking a bottom, it just ran on you. Was there a pattern here to come off of? Not really, at least on that part of the chart. The 18-week moving average of closes, you did fight something of a battle. You went up to it here. Then the market never looked back. That was the interesting thing. It didn't even fight at it. Normally, you'll do this. This market didn't. It just launched itself straight on up, as you can see, and now the question is resistance. You are up and over for the first time over the top Bollinger Band on a closing basis in quite a while. You had done it, I believe, back here, and then you pulled back. So how often do you stay over the upper Bollinger Band? Or under it. Go both ways. You can be under it 5% of the time, over it 5% of the time, and each consecutive one of the weeks counts as one of those percentage points. Because this is the first week over it, you only got 4% odds. That's my own rule of thumb, but I like it a lot. I have found that it does well to at least have it as the rule of thumb and understand what you're dealing with. If you've bought previous or sold under Bollinger Bands, has it proven in this particular environment since 2017 a good move? It hasn't. That's all that I can say. But that doesn't mean that it can't, all right? Again, that monthly chart is powerful. You've got some sideways action. Will you follow through? I don't know. But my answer to you is going to be that the momentum's up, the bias is up, and you are ahead of yourself on the weekly chart. I'm not going to cover Bitcoin this week. I just don't want to do it today. I'm late. That's the reason why. In looking at the other part of the markets, the weekly chart of GLD, the ETF. Last week we were under the Bollinger Band, back over it. Now, if this market's going to take this as a base, what it should do is just launch itself out of here and not really come too far away from that upper Bollinger Band. If you start seeing this week's low taken out, it might be a sign that the market's going to pull back even a little bit more. So something to look at there. When we come to the miners, here you've got the best look of that sideways action. Do you see this? There is the sideways action that we're talking about. I showed it to you on the monthly chart of gold. This is the weekly miners. If this market is good, this either becomes a big base or a top. I'll let you figure out which one you think. I happen to think, because I'm getting the inflation scenario that I'm seeing with all cylinders firing on so many parts of our economy and other economies around the world, that as people make more money, be it salaries, bonuses, whatever it is, that money finds its way back in and things start chasing themselves. We've had a long sideways market here, actually since the beginning of 2017. Now the question is, can it break out of here and give a move? In the silver market, you went right on up this week for the first time since back here in September, hit the upper Bollinger Band. You have an outside week up. A good market rarely takes out the lows of an outside week. We'll see if that does. What I mean by good is a market that wants to keep that momentum. The bias is up. Momentum is up in the market as well. You have hit an upside target at 17. Well, you got up towards it. Let's see. The high this week was 1770.50, and the upper Bollinger Band is 1778.70. So you missed it by about 8 cents. In the copper market, I view this as a pullback. Now, part of the problems in copper, of course, is we need China to be consuming it. It's the biggest consumer of all for it. And that'll be the question. How is their economy doing? So we got up to the upper Bollinger Band, and this is why it's so important what I teach in my charting course. If you didn't take it, I take the name off these charts. Sometimes I take price off. I just want you to look at the pattern. Would you buy an upper Bollinger Band? My advice is you would not. That's what I teach. And notice how the market is pulled back to what I call a line in the sand. I call the red line, which is the 18-week moving average, the neutral point on a chart. On a daily chart, same term, it's just a daily average. Momentum still slightly pointing down, bias up, a corrective mode, not the beginning of anything yet to the downside. In the platinum, you've gone from a lower Bollinger Band in basically 2 months to the upper Bollinger Band. It certainly didn't give you a shot unless you're a bottom picker to come in, and you are at resistance points. Does that mean it has to stop going up? No, but you're at a resistance point. You closed over the you closed over the upper Bollinger Band. Last week, let's take a look at this. You closed over the Bollinger Band, and the week before, you closed where? Over the upper Bollinger Band. You're 3 weeks in a row. So it can happen. That is the point that I'm trying to show you. That gives it a 2% chance of doing it next week, and after that, a 1% chance. But it still doesn't mean that if you bought upper Bollinger Band, you can't come in at better levels if that's your desire. In the palladium market, momentum is still bullish. It is starting to try to give you a little wiggle in it. If you look at this low of 1078.90, you took it out this week. So you stepped out of the pattern, and this had been, I think, the strongest of all the metals since the beginning of the year. It just kept going up and hitting the upper Bollinger Bands, didn't get back under the 18-week average. There's certainly been a shift of some type taking place because now you got the lower low and the higher high. Should the stochastics turn down a bit, then I would look for prices to back off even more, so I'd keep my eye on that. In the dollar index, helping all the metals is obviously, if they're priced in dollars, a lower dollar, and that's one of the things you've got. This market just came out of, on the weekly chart, all this sideways action right here. So this is a breakout to the downside. How far it will go, the market will measure, but there's nothing here that looks bullish at all to me. When I put it together, it's reasons that I do these price counts. Now, over the weekend, I do the financial price counts now for the firm. And it's a service that we have. It's something you want to look at. We cover the energies. We cover all the financial markets. We cover, as a team here, the grain markets, the soft markets. And what a price count is if a market breaks out to the upside, like you had a bottom here, up, comes down, where might that market count go? We do it both often on daily and weekly charts. Beyond that, I really don't do it, and I do it to the upside and the downside. The whole idea is a price count is not a tool that you use to get into the market on. It is an area tool that gives you an idea that the market's in a caution zone, or if a new trend is kicked in, how do you get involved? All you need to do is give us a call, go to our website. You can click up here to also go to our website if you're watching me on YouTube, or underneath us on many websites says, click here for Ira's free information. With that, I'm Ira Epstein. I'm getting ready for your webinars. Be ready for them all. I'm hoping to get something set up and choose the software, be it Monday or Tuesday, and then away we start going. So I'm in the final round of getting them ready, and there'll be an invite, and that's how you'll join. I'm Ira Epstein. Take care.